happening? What's happening? What's happening, y'all? Welcome, welcome, welcome. Well, I get my what in the world did JR do?
You know what you're doing.
What in the world did JR do?
It shocked me. Oh, let me check the post with it. Oh, because the erosion. That's the. I got. Want me to put my coke on there?
I got to look at that later. I'm about to look at that later. Let me I'm sorry, y'all. Y'all caught me in a minute. I'm giving y'all some time to come in, man. I'm giving people time to come in anyway. That's what I'm doing. And I'm trying to get my IG together. I'm sorry, y'all. For anybody who new here, y'all don't know how I get down. I jollifies. You're welcome to leave. Go. Y'all know how I be doing, man. To YouTube. Go to YouTube. For anybody that decide they want to pull up on IG. And you don't have to come to YouTube. You're welcome to stay on IG. But if you want to see my screen, come on over to YouTube. Just search Tim's Tidbits so you can go to your browser and type in youtube.com/the new TLR and come on over to YouTube if you want to see the screen. If not, just sit right there. What are we talking about today? We are talking about, let me get my picture together. Let me get my picture together. Let me share my screen first. I'm going to share my screen. Then let me get my picture together. Where's my picture? We're talking about. Drum roll, please. Could this be the perfect ICT strategy for the 9-to-5 worker? That's what we talked about today. Could this be? And I'm going to be upfront with you right now. That title and thumbnail is complete clickbait. Why do I say that? Because there's no such thing as a perfect ICT strategy for anyone. There's no such thing. But if you understand the ICT concepts, you can put together a model that works out for your trading identity. What I'm going to do today is share with you one possible scenario, something that I believe anybody who understands the ICT concepts can use as a person who still works 9 to 5, who has no desire to leave their 9 to 5. Even if they want to leave it, they just haven't left it yet. But give them an opportunity to trade either futures or options with the SPY or SPX if you got the money, if you feeling frisky like that. That's what I'm going to share. What is this coming from? Today's episode is being inspired by the homie, Father of Legends. Why is it being inspired by Father of Legends? Well, yesterday in the Discordia, I'll be making up words. Yesterday in the Discordia, he shared a post. Said he felt off today. Something wasn't clicking. This working, trying to trade is hard. Not giving up by any means. Just think I need to explore some other time-friendly options. No pun intended. It is. I agree with you. Trading while you're working is hard. Especially if you're trying to day trade while you're working. It's not impossible, but it's difficult because you have an obligation to an employer. Right? Go full screen on this. You have an obligation to an employer to work set amount of hours. We all have breaks where you can go and check things in the market. But if you're trying to day trade and work 9 to 5, it is difficult because you have an obligation to an employer. Now, let's get to the perfect ICT strategy. Huh, wait a minute. Let me not laugh. Rocky might say I'm being unprofessional. I'm sorry, Rocky, for laughing and making jokes. Speaking of making jokes, here's my buddy. Here's he. Come here, buddy. Don't run, buddy. Stop running. There you go. Coochie, coochie, coo. Coochie, coochie, coo. Rocky gonna love that. Let me see who in the chat before I get into it, right? Uh Perfect, you say? Shout out here to learn to share. Michelle Tucker. What's up, Michelle? How you doing? I'm anxiously awaiting the perfect strategy while working at W2. I got me one. Told you it was clickbait. I got me one. Clickbait. What's going on? Cameron. What's up, FC? Somebody's mother. Happy weekend to you. I got me another one. Clickbait. What's up, Joshua? Note to Rocky. What's up, Darren? What's going on, Kyrene? What's going on? Clickbait. Oh, Rockley is going to Rocket hot by that clickbait, FC. Rocket, what's up? Hey, baby. Hey, baby. My wife out here in these Columbus streets looking good, looking like a bacon, egg, and cheese sandwich with her little walking pants on, walking out looking good. I start to follow her in the truck. Let me go see who looking at my baby out here with all that bow in them bow. Rocket gonna be mad about that too. What's up, little Hulk? What's going on, finest Superman? What's going on, Audrey? Hey, Rocket gonna be mad because I was talking about my wife with all that bow in them bow. Hey, man. Hey, y'all know when somebody, hey, y'all know I can't let nothing go. So when somebody say something, hey, I got the, hey, I'm gonna twist the knife. I'm gonna twist it. Let's get to it, man. Let's get to it. Okay. Now, if you before we get to it, if you totally understand all the ICT concepts, right, and you don't want to just sit through me rambling and getting distracted and all that right there, right, go ahead and take your notes. Note time. Take your notes. This is what I'm going to explain, right? First thing you want to do, right, is you're going to enter using ICT breakers. Witchblade, there is no paid membership for any. Nope, I retract that. I do offer YouTube memberships. I'm not like super active on it like I used to be. I used to be on that every day, doing stuff every single day. Now it's not every single day. It's when the spirit moves me. And it's, I think the most expensive one is like $7.99 a month. But the Discord is a free Discord. It's not open to the public anymore. I just formed that Discord because I stopped using IG and I needed a way to reach out to people fast. And I was like, hey, I'm opening up a Discord. I'm only letting 100 people in. It's nothing special. I just want to be able to say, hey, I'm going live. And I never share anything in a Discord that I don't share on my YouTube page. It was just solely so that I can reach out to people and say, hey, I'm going live right now. There is a community in there. They do have admins in there. They do a great job. You know what I'm saying? They support each other, but it's you ain't missing nothing by not being in the Discord. Okay. Now, what was I saying? Oh, note taking time, right? So if you are a 9-to-5 trader, right? I think the most effective approach for a 9-to-5 trader who can't sit in front of the order block, in front of the charts, is to trade off of daily order blocks and using 4-hour, no lower than 1 hour order blocks as your entry. right? So that's it in a nutshell. Wait until a well, actually you're going to use it's going to be stemming off of monthly biases, right? So monthly order blocks, right? Connected to weekly order blocks, connected to daily order blocks, entering in on 4 hour order blocks or 1 hour order blocks, depending on how how much time you got to listen for alerts. If you don't have a lot of time to listen for alerts at work, you're going to be probably entering in on daily order blocks. If you ain't got a whole lot of time, and you're primarily going to be doing it based off of longer term swings with the SPY, buying them like a month out and expecting to holding them for a week or two, right? How much time you expect to hold it, you want to at least double that when you're buying your SPY calls or puts, to give it time to play out, because you can't watch it day to day and you're entering off of daily time frames and you need time for it to play out, right? So the order blocks is the easiest way for a 9 to 5 trader to trade when you don't have time to see it, because you have plenty time to see what the price is for the order block. You have plenty time to set pending orders. You know what I'm saying? The only thing about it is, when you're doing, if you're doing futures, you can set a limit order and it'll be there. If you're doing options, you're going to have to set reminders, because the way me personally, I watch the ES to make entries on the spot. So when the ES alert go off, then you be like, it go off. Then you can place your order for the spot option, because with the options, you don't know what the premium going to be at the time when it goes off, because it's a derivative. So if you don't know how to do all of that, I got stuff in the playlist that talk about doing all that. We're sprinting now. We're not teaching anymore. Now, that's the strategy. Now let's go to the charts and break the strategy down. Let's go to the charts and break the strategy. Oh, before we break the strategy down, right? I'm lagging crazy. Okay. I don't know if y'all heard everything I said, because I was like lagging crazy. Anyway, who remember on Friday when I talked about that hourly Sibby that was up in here somewhere, and I said, you can't trust it. You can't trust it. Who remember when I said that? And guess what? Guess what it did? Let's go to the hourly charts real quick. This is it right here. That's that Sibby. That's that Sibby we was talking about. When I said we should hit that Sibby and come down, you can't trust it. No, you can't trust it. And look what it did. It went up there, pushed through that Sibby, hit this order block. I actually took a short off that order block. Hey, Michelle, I was correct. My calculations were correct. What I put in the Discord about that order block, I'm not going to say it on Algo's internet because it ain't none of their business. But what I said about what this drop should have done, it did it. Yes, sir, Bob. So, and I took an order off of that order block. I set a limit sale off of this order block, and me and my kids, I went to go pick my kids up, and we went to the gym. While I was in it, when we was coming out of the gym, I got an alert. You can ask my boys. What that? Do me a favor, come here. Oh, PB think I be capping. PB think I be capping when I be saying stuff. I don't be capping. What that? Come here for a second. Do you want to get on camera? I'm gonna ask you a question. I said, do you mind getting on camera, or you don't want to get on camera? If you don't want to, that's fine. I just want to ask you a question. Usually I talk louder. Okay. What up? Yesterday, Sexy Dex. He teenage boys, when they start working out, you can't tell them nothing. But daddy still hit hard. Hey, yesterday when we got in the truck, what did I say do you remember what I said when we was looking for him? What I said just happened? Wait, say it again. Remember yesterday we was leaving the gym and I got in the truck and I was like, hey, I just got, what did I say I got on my phone? You remember what I said?
The notification.
Notification about what?
I don't remember. Some with the trader.
So y'all heard what he said. Say it again. Say it out loud.
Some with the trader.
I got a trade in what?
I forgot what you talking
I'm just saying, what popped up on the phone?
The notification.
The notification. I just had to make sure they heard that because some people be coming on saying I be capping sometime. Right. So as you see, when I got in the truck, I set a alert. I mean, I set a short. That's all I need. Thank you.
Oh, okay.
Look out. You see how he's stretching? You see how he's stretching? You know what I'm saying?
Oh my god.
You see how he's stretching?
I'm gonna rip your whole roof down.
Hey, look here.
I get up.
Just I had pinned it up. It usually flipped back further than that, but I pinned it up because it was like sagging and having shadows and stuff and getting on my nerve. All right, he gone. Wasn't really paying me attention no more, but I'm used to it. Now, so you see how he ain't nobody on here your age. Ain't nobody, and if any of y'all on here cougars, I got my eye on you. If there's any cougars on here, I got my eye on you. They forget how to wear a shirt. They don't know how to wear no shirt no more. But Rocky gonna love this episode. So so I set an alert on this order block right here, right? I set an alert on this order block right here, right? These are our hourly candles, by the way, right? I ain't set an alert. I'm sorry. I set a sale order, a sale limit on this order block right here, right? And I left and I went to go because I didn't trust this Sibby right here, so I wasn't trying to enter down here. Remember when I said, hey, I'm not, if we hit this Sibby, I'm not trusting it down here, right? It's got to show me that it wants to do something else. So the next area that was going to show me that it wanted to do something else was this order block, right? This order block was the next thing. What was it? I'm going to get to what I'm supposed to be talking about now. I'm talking about yesterday, right? But it's using what I'm getting ready to talk about now. What was the next thing? The top of this weekly fair value gap. Remember what I said? I'm not trusting this because we can go to the top of this weekly fair value gap and then pull back some. Or we can just keep going up. But the SIBI combined with the fair value gap combined with the bearish order block, I say I can at least get me something out of that. So I set a limit order at the open of the order block, right? And I set a notification to let me know when it hit my exit, right? When it hit my exit point. Now my exit point was based off of a lower time frame, but that notification that I got, it was saying it hit your exit. Did it mean that it hit my exit that worked for me? No, it don't. It just mean it hit my exit, right? But the likelihood of it working for me was in my favor because I trust the process. I didn't know if it worked for me until I got home. That's why when I type what I typed to Michelle in the Discord, I say, if my calculations are correct, this drop should have blah, 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 blah. Right? And when I got home, I'll say, hey, it did it. It did not stop me out. And I got that, right? So using that order block, set the order, came up, got me, came down, hit my profit target, and I was out. Now, the same thing that I did yesterday for myself, and I have done numerous times before. Let's go through and explain that. Now, I explained it based off of what we're looking at here. I said we got that SIBI, we got this weekly fair value gap, we got this order block. Now, let me hide all of this and go back and explain it in the way I said. You're going to look at the monthly, you're going to look at the weekly, you're going to look at the daily, but you're just going to be doing it based off order blocks. Now, mind you, the more PD arrays you try to implement and the lower the time frames you try to implement, you can start to reduce your risk. And we'll talk about how to reduce the risk in here too, just as a bonus. But let's clear this off and let's go to the monthly, shall we? If you're a note-taking type person, step one, go to the monthly. Now, a lot of this is going to be, well, all of this is going to be looking at it in hindsight because it's already done. But this is how you learn how to trust your model. You look at it in hindsight, and then you look at it play out in real time by sim trading in real time, right? If you want to get the experience of doing it in real time, platforms like Ninja Trader that I use, it lets you download old data. You can go back up to 3 months if you haven't downloaded it already, but you can download each day for back to 3 months, and then you can go back in time and trade it as if you're trading live in that time. So that'll give you, that's what I did to learn how to trade futures. I used to trade, right? I used to trade like 2 or 3 weeks a night. I would sit down and trade like 2 or 3 weeks per night. Monday, Tuesday, Wednesday, Thursday, Friday. Every night. Going back trading like 2 or 3 weeks per night. Nonstop. That's how I learned how to trade futures, right? So, what are you looking for on the monthly, right? On the monthly, you're looking for what's the bias of price, right? Now, let's go right here to last month's, right? Let's go to last month's, and we're going to do it based off of last month and look at what opportunity we had in this month, right? So based off of this monthly candle right here, right? Based off this monthly candle, right? Let me turn my fancy dances on. Got to get my fancy dance. See, boop, there it is. All right. So based off of this June candle, right? This June candle is bullish. What makes the bias bullish, right? We have a bullish break-in market structure, right? We got a bullish break-in market structure right here, right? Make these numbers big so y'all can see it. Make it black, make it black, make it black. Bullish break-in market structure on the monthly, right? We got us a bullish break-in market structure on the monthly, right? So we got a break-in market structure on the monthly candle, and we got a closure above that break-in market structure. What does that mean? We have taken out monthly buy-side liquidity, and we did not reject it. If we take out liquidity and do not reject it, the draw for bullish is up and to the left, right? So the draw and the bias is up here somewhere. I don't care which one of these highs you pick. The draw is just up here somewhere because you got a high here and you got a high here. Matters not to me at this time which one you're picking because we just want to know the draw. The draw is most important. So the draw is still up here and the bias is bullish. Now, when you're swing trading as a 9 to 5er, take a note. That's another note. Start with the monthly. Figure out what the monthly doing. Take another note. You want to trade with the bias. You're more highly more high probable the more the more probable trades. You know what I'm trying to say. The more probable trades are going to be with the bias, right? Bias is a hussy that's for the streets, but for the overall bias, you want to be trading with the overall bias. So, side note, that was a side note. Now, back to what I was saying. The bias in the draw is up here somewhere, right? Up there somewhere. Now, and that's based off of not even being able to see this candle right here, right? This is what it will look like once this monthly candle closed right there. There's your break-in market structure. Boom. Right? Now, you don't have to wait for the candle to close. You can start to enter what well and you don't have to start. You can either wait till it closes for more confirmation, or you can just once you see it break, you can start to refine on the weekly then, right? And we'll map it out to see when it would have played out for wait until it closed and refining. Now, Let's put us a horizontal line at the beginning of this month, right? So we're gonna put a horizontal line there. In trading view, when you put the lines there, it's for the beginning. So you know what I'm saying? If you want to put a line close to the end of the month, you want to go one candle to the right, right? Go one candle to the right, and that'll be like right at the beginning of this month and at the end of this month, right? So putting that there, I'm gonna start at the beginning of the month so I can see, so I can look see what time during the month this break in market structure actually happened, so we can see how we could have refined down while it was happening live, right? So let's make this a, how thick is this right here? That's 3 on that monthly. Let's make this monthly 3 points too, right? So that's a 3 point, the fat one. We know the fat one is the 3 point. Let me see. So we're gonna name this the we name the same thing. Monthly breaking market structure. Bullish um bullish breaking market structure monthly. We name the same thing. All right, we'll name it the same thing. There we go. Okay, now. So now we got that breaking market structure right there. The bias is up here, right? The bias is bullish. Now, this month here, we know now on this monthly candle here, right? We're coming down here. Boop. It started going back up. So now this is the very high of the order block, right? That's the very high. This is the entire monthly order block right here. We're going to mark that out. Order block monthly, right? That's the very high of the order block right there. That's the high to the low. Entire order block right there, right? That's the, what, Tim? What makes that the order block? If you don't know that, go back and look at the we sprinting right now. We sprint. If you don't know that, you shouldn't even be trading live. You still in the learning phase. Go learn and then come back and watch this later. Now, that's the very high of the order block, right? And that's the very low of the order block right there. Now, that's the breaking market structure. So that's on the monthly. Now let's go down to a weekly, right? So we can see when we actually created that order block, right? So this week right here is when we actually created that order block right there. Boom. When we went above that high, right? That's when we actually created the high of that monthly bullish order block. When we went this level right here, that's the high of that. And this is the entire order block right there. Right now, looking at when we created that order block on this week here, boom, we came there to this week right here, creating the order block. This is the high of the monthly order block, right? Then we open up this week right here, right? And then we start to come back down, right? Starting to come back down right there into that. Now, based off this monthly order block right here, right? Just based off this monthly order block right here. If you are a trader who's willing to enter on the first touch of the order block, right? You have had 1, 2 opportunities to get into longer term swing trades on the SPY, right? And depending on your profit target or whatever, if you was going for a specific high over here, you still are in. If you was going for a specific amount, this move here probably sufficed you. You know what I'm saying? Because that's from 4409 to 4607. That's just say 200 points. It's 2 points shy of 200 points on the ES, right? That's a very nice move. That's a very nice move for SPY option. So if you're in the mind frame of getting it on the first touch of the entire monthly order block, right? And you would, once we created this order block here, you would set an alert for when we come back to 4409, because you once we created the order block, right? You're watching it, boom. You're not waiting for it to close, right? This is the first week of June. This is the second week of June. The second week of June is when we broke that high and created that order block, right? You're going in real time. So now you say, hey, we got a monthly order block that's created. If we trade back down to it, I'm going on the first touch. I get an alert for 4409. When 4409 comes up, right? You can either go in right then and set your SPY call option entry right then based off of the ES hitting 4409 and whatever price that would be for the SPY. Who cares? We're just going to pretend like this 4427 was the number. I'm just picking something. You go in there and you would just say, hey, give me some 427 calls, or however, if you do it in the money, out the money, or at the money. I'm just saying at the money right now. Give me some 427 calls for, and it was at when we said it was June. Give me some 427 calls for July sometime, like mid-month to end of month July. It's second week of June, so do it to like the middle of July. The monthly expiration for July. 427 calls. Boom. There you go. You know what I'm saying? You set your price for that. And then that will be your entry for if you do it on the first touch of the monthly, right? Well, Tim, I don't want to do it on the first touch of the monthly because I got a whole lot of downside below me. Okay, let's keep going. So now, boom, we're looking at weekly, right? We're looking at weekly. So now we've created a monthly order block here, right? The monthly draw is up here. Once the buy program ensues, we expect what? We expect discount PD arrays and down close candles to support price, right? So we're not entering on this candle here because I'm not a first touch person, right? So this next week, when we come up, what do we have right here? We've exceeded the high on a weekly down close candle, right? We've exceeded the high on a weekly down close candle, right? So we're going to go breaking market structure. I'm saying breaking market structure. Don't worry about it. I'm going above a weekly high. That's why I'm saying breaking market structure. Don't be like, hey, Tim, we didn't break a swing. I'm just saying a weekly breaking market structure because we're going above a weekly high. We're taking out weekly external liquidity, right? We're taking out weekly external liquidity and we're closing above it, right? But it's a weekly down close candle. So once we break through that, right, we're expecting this candle to support price. We're expecting this candle to act as a type of order block, a type of order block. We're expecting this to support price, right? Now, so that's why I'm just saying breaking market structure. This ain't a true breaking market structure. We just breaking above a high on a weekly basis, right? Keep that in mind. Matter of fact, I'm just gonna say buy side liquidity because I don't want nobody to be like, well, Tim said, and Tim said, chat it out. All right. Okay, so we're gonna use that as 2 points. That's good. So the weekly is 2 points, right? So now, boom, we got a down close candle, a weekly. Now, y'all know what ICT teach and what I say during the buy program or the sell program. You don't want price to close below 50%. Or the mean threshold or the consequent encroachment, depending on if you're looking at a a reference point or an imbalance, right? So in this case, we got ourselves a reference point, which is this down close candle right here, right? We want this to act as a weekly order block, and we do not want price to go close below the mean threshold of that. Matter of fact, let's get some Fibonacci's, right? Let's get some Fibonacci's and set it as quads, right? I hit OTE, I'm sorry. Set it as quads. Boom. Now those are quads so that we can see this right here is the 50%. This red line right there is the 50%, right? So we have, boom, we've broke on the weekly. We've created a weekly break to the top. We want this to act as a weekly order block, right? We want this to act as a weekly order block, right? We don't want it. We want it to stop price from dropping down. We want it to block price. We want it to support price, right? Now that we got that set, we're going to put a vertical line at the beginning of this week. Let me delete this out. I'm just going to copy this one over, right? And we're going to change this to weekly. We're going to change this to weekly, right? Because it's going to be the weekly line. We're going to change this to weekly. We're going to change let's change the color. Let's make the color red. Let's make it a dash line. And let's make it 2, right? Change the color of the text to red also. All right. So we got our weekly. Got dog it him. All right, so we got our weekly. Now that we've taken out this high right there, let's go down to the daily, right? Now we're looking at the daily chart, right? So here's the beginning of that week. So that's Monday, Tuesday, Wednesday, Thursday, Friday. We actually broke that high on a Friday, right? On a Friday is when we actually took out that high, right? And then looking at it, we actually got above this high right here, right? When we took out that weekly high, right? When we went above this high right here, and then we actually got above that high over there too, right? So we got above that high also one day. All right. So this is when we took out this high right here. So now on the weekly, right? Now on looking at the weekly, inside that weekly candle, we actually have a weekly order block right here. There's a weekly order block right there in line with the monthly order block right there. Right there. So now when we came up for this week on this Friday and we took out that weekly high, right? Got above that prior week's high too, right there. We created a weekly order block right there. So now by refining down to the weekly candles, now if you're not a first touch buyer, you didn't get picked up on this 44 or 9 because you say, hey, I'm not a first touch type person, right? I didn't get that first touch. Now you've refined it to now you have a weekly order block in conjunction with a monthly order block. So now you're new. And based off, I forgot to say this, based off the monthly, right? Based off the monthly candle, this is your entire order block right here. So just based off the monthly candle, you have to give it to at least mean threshold of your entire order block, right? You have to give it to at least mean threshold of your entire order block. So on the monthly, you got is 4409 down to 3640, 3684. Right? So you have to give it to at least 44, I mean 40, 47, right? On the monthly. That's your minimum risk that you can put on based off of this monthly order block because of the size of the monthly order block. That's the minimum risk. That's your, you have to give it to at least there. If you enter in at 4409, you have to give it to at least 4047 based off this order block on the monthly. Right now, when you refine it down to the weekly, you wait for the weekly to form. It's this right here. So now you didn't take it on this 4409. Now you're looking at this weekly order block. Once we took out the weekly high, now you got a weekly order block. Now you're looking at setting an order to set an alert to let me know, hey, when do I hit? When do I come back to 4426? Right? So when you come back to 4426, boom, your alert go off. Right? And you go in and you, if you're trading futures and you're gonna let it just sit there and swing it, right? You can just have your limit order waiting to pick you up at 44, 26, 25, right? If you're trading futures and you're swing trading futures, you should put your limit order there. But if you're options, then you go in and you say, okay, boom. Now I'm gonna go to the spiggity. Now that my alarm go off, and we're just gonna use that same number again, 427. Shoot me. I don't feel like looking for numbers. Give me a call for 427. You do it based off if you're in the money, out the money, at the money, however you buy your options for. And when is this? We going in. This is we come back to that price at, when is this? On Thursday. On Thursday, the 6th of July. So on Thursday, the 6th of July, boom, give me 427 calls for August sometime. Right? Boom. There you go. Now you've refined it to the weekly, but in this case, instead of your risk being all the way down to 4047, your risk, right, has to be at least below the below, at least below 43.97.50. It has to be at least below that. That's mean threshold of the weekly order block. The safe stop would be below 40.36.50, the low of the order block. That's the safe stop. The minimum stop is below the mean threshold, right? And you're getting picked up here at the high, the open, however you want to do it, right? The high, the from this don't really have a wick, so the high and the open are not far off. You know what I'm saying? You can use the longer the wick. You know what I'm saying? The longer the wick, you may want to think about how much risk. Hey, I want to get in at the open. You know what I'm saying? If it got a little teeny wick, I can get in at the high. You know what I'm saying? But if it's got a super long wick, hey, you might want to go consequent encroachment of the wick. However you want to enter it, that's up to you, man. But base it off the order block. Now, let's keep going down to a daily. Let's see what it looked like on the daily. I'm on the daily, right? So these are this is the daily order block based off of when you made the weekly, the when you had the weekly break right there. You came back down. I said a weekly order block earlier. I'm sorry, but these are daily candles. Once you got the weekly break of the weekly high, right? You want the weekly candle to act as an order block. And inside that weekly candle, we want to act as an order block. We got an actual daily order block where the weekly candle we want to act as an order block is in line with the monthly order block right there. I called this a weekly before, but this is actually the daily order block right there. I apologize for that. Now, let's just say you don't want to enter off of the daily time frame. You want to refine down to 4 hours. That's up to you. However much time you got to put into it, hey, put your time into it. Right now, looking at this example right here, right? We have, we come down here, boom. We got a 4-hour order block here, and then we got a 4-hour order block that's acting as a propulsion block right here, right? Because this order block here came down into this order block over here and took off. So now you see here, now you got your propulsion block there, and it got right here. You could have got a pickup off of the propulsion block over here on um Monday. But now let's look at this. Let's refine it to when you can actually get picked up based off of options times, right? So now we want to look at times a day when you can actually trade options off of these levels, right? So this is the area where we was like, hey, we're not getting picked up on that. This was the area when we first started looking at, okay, I'm willing to go in on this because I don't want to be the first touch, right? So let's come over here. Come over here. We got a 10 a.m. candle right here, right? You kind of got picked up off of the no, we wasn't using the 44.9 no more. Right? We weren't using the 44.9 no more. We were over this area. So we need somewhere in this time right here. So 6 p.m., 6 p.m., 6, 2 a.m., 10 a.m. Boop, 10 a.m. right here. Right here. So sometime in here, right here in this area here, you could have been getting picked up for options, right? You got a 10 a.m. count, these 4-hour candles right here, right? So on this 4-hour candle right here, this is the 6 a.m. 4 o'clock candle, and this is the 10 a.m. 4 o'clock candle. So sometime at from 10 a.m. up until 2 o'clock, this candle right here, you would have been getting picked up on this candle right here during the options time. Right here. This is the candle right there you would have been getting picked up on after your alerts was right. This is the 10 a.m. candle on a Monday, right? So that's the 10 a.m. candle on a Monday for the options, right? You would have been getting picked up right there on that candle. Now, let's look at it from a future standpoint, right? From a future standpoint, if you trade the New York, that's the same candle. That's the same 4-hour candle you would have been getting picked up on. Now, if you're willing to go as low as a 1-hour candle, right? Let's look at it from the standpoint of somebody who's willing to take an entry as low as a 1-hour candle, right? But it's all based off of the higher time frame. You notice I'm not adjusting any of the daily, all I ain't adjusting none of that. That's still the same. We're just looking at candles that you can possibly enter in on the lower time frames. So um here is a Friday right here. Friday, this is New York trading time right here. So here's a Friday at 1 p.m. Right? This is 8 a.m. So if you only trade the New York open, right? 10 a.m. we're coming up, we get above, right? And then we got Friday at 2 p.m. We come down, up in this area here. If you're willing to trust it in this area, this is, you say, hey, I'm not trusting it. This is all below that mean threshold, but you got to remember, this is a mean threshold of a daily, right? You don't want a daily to close down there. This is a daily mean threshold, right? So on these intraday stuff, it's going, you can see some closure below it, because this, you got to remember which level you don't want to see the closure below. So it's up to you. If you don't want to trust, say, hey, I don't want to trust that. I want to be entering above that line. I don't care what time frame it is. Okay, so fine. So now we come over here and we're looking at this right here. Here's a 9 a.m. right here. This 9 a.m. candle there. So that's that's between 9 and 10. Between 9 and 10, we drop down right below this area here, came down into the high of all of this drop right here, came down into that. All this area here is in our range. It's below 4409. All of this is within there. right? All of this is below our this is all below our line. So any of this area down here, you could have been entering on, right? For futures or options, right? And for futures, if you're not holding it overnight, right? Entering anywhere here, right? Let's find four. This is 3 o'clock. This is 4 o'clock. So if you entered on this first 9 a.m. candle or this 10 a.m. candle, this 3 p.m. candle, that's a pretty nice move right there. Let's just say if you got in on 4409, this right here, this is what's that? Almost 20 points. This 3 o'clock candle went up almost 20 points. That's pretty fair. You could have shot for that high as your low hanging fruit. You know what I'm saying? That's pretty fair, for futures if you're not holding it overnight. But if you're holding it, that's pretty good, you know. But that's all you got to do. That's it, man. That's all you got to do. And it's easier. As you see, the more intricate you try to get, the more involved with the candles you got to be. But if you just do it based off of the monthly, the weekly, and the daily bias and set your alerts for those levels, then you don't have to sit in front of your chart all day long, right? This is a monthly candle. This took a long time to play out once it broke above that, right? Then you're looking at the weeklies, right? It got above it. This was the first week of June. It got above it. The second week of June is when that break happened. So you had a whole 2 weeks pretty much before it broke above that. You know what I'm saying? On the weekly. And then when we went over here and got into this area, y'all saw that it broke this weekly high on Friday. So this entire week, you was waiting the whole week for this right here to play out just to break that high if you didn't want to get in on this pullback right here. Right? Which is fine. You don't have to force stuff. You know what I'm saying? You trade the way you want to trade. Right? And as a 9 to 5, you're probably going to be trading more along the line of options because the intraday stuff, you can do it, but it's going to be super difficult. You got to have the time to get intricate. You know what I'm saying? Right? And then, matter of fact, let's look at that. Let's go back down to, we're going to go down to an hourly chart, right? We're going to go down to an hourly chart, 1 hour, right? Let's look at the different opportunities that played out based off of these levels and what times of day it was. Let me put my crosshairs on. So came down, we pushed up, pulled back down. Did we set this area here? Boom, an opportunity to go long there. We said that was like roughly 20 points on, and that was on a Wednesday, right? So you got a chance to trade on Wednesday, boom, to get 20 points, right? Right here, this is between 9 and whatever. We come back down into this order block right here, took out those lows. We took out those lows coming back into this order block. That's on a Thursday, right? That's on a Thursday. And we got all the way to Thursday, 4 p.m. around here. So let's just say mean threshold of that order block we got in 44, 1475, and we got up around, that's what, from 14 to 37. That's like, let's just say another 20 some points. So that's on a Wednesday and a Thursday. That was two opportunities to get anywhere up to 15 to 20 points, right? Anywhere up to 15 to 20 points. We ain't gonna pretend like you can get the whole 20 something. So 15 to 20 points. Let's just say 30 points on the week. Who would be mad at 30 points on the week? You just took two trades, 30 points on the week, right? 30 points on the week based off of these time frames right here, all being based off of order blocks. This one was based off of taking a trade on the daily and the monthly order block. This one right here was based off of a trade coming back into the daily order block, into an hourly order block right there the next day, right? So all of it based off of order blocks right there. Two opportunities in the week to get two decent trades. Then Friday, there's nothing here based off of the order blocks to take a trade on Friday, but who cares? You got a trade on Wednesday, a trade on Thursday, and that was it. But it was only two trades for this entire week right there. based off of the monthly, weekly, and daily order blocks. I yield my time. I yield my time. That's all I have. Did I confuse anybody? If I confused anybody, put in the chat and say, Tim, I'm thoroughly confused. If I confused you, say, Tim, I am thoroughly confused. I'm glad I did not see this comment because I would have ended the live. I would have ended the live immediately. Shout out to homie Mark. He has a very offensive YouTube channel name. And since it's him, he's allowed to say it. Y'all don't cancel me, but it's called Half Breed Observer. I would have never said that about anybody. It's him. He's talking about himself. He can say that. If you're into the controversial, all kind of political and satire, he got a channel called that, and then he got Uncultured Currency. Of course, him and Mo be doing a thing on the Come Up Series channel. You know what I'm saying? It's another way of looking at the market. Matter of fact, him and Mo, they got similarities, but they kind of polar opposites, but they do a good job. But it's another way. It's always good to see other people's point of view of the market. Michelle, you're a little confused. Michelle, if you're a little confused, feel free to pull up and tell me what you're confused on, and we'll try to sort this thing out. We'll try to sort this thing out, Michelle. Here, I'm gonna put the link in the chat. Link is in the chat. If you're kind of confused, Michelle, feel free to click on the link that I just put in the chat. And wait a minute, why the link not going in the chat? Why is it frozen? Am I frozen? Can y'all see me? It says having problem with my internet connection. Can y'all see me? It's not, it didn't go. Okay, it should be there now. What's up, Marco? What's up, Marco? Just waking up, gonna run this back. Appreciate you too. Okay, then y'all enjoy the playback. You confused, baby? You thoroughly confused? Or is that what's up, Michelle? What's going on? Michelle be coming through with the hard hitting question. I love when Michelle got a question.
Hold on, I gotta get rid of.
You got rid of what? I said you fine.
Okay. No, I think I needed to mute. Can you hear me?
Yeah, you fine.
Okay. Yeah, so I'm a little confused. I understand starting at the monthly and then going down to the weekly and then the daily. But I think that's where I got a little lost if it's for um I guess swing trading and the higher time frames. Why would we be going down to the 1 hour? Or are you just saying like that's optional? Because like
That's
for
optional.
me, when I'm thinking about like 9 to 5 and not being able to watch and look for the entries most of the time in the middle of the day, I guess I wasn't
Yes.
following that or clear on those
That's why.
entries that you were pointing out.
Okay, yeah. And the reason why I was pointing that out is because when it comes to options, it's only certain times of day that you're going to be able to trade it. So if during that time of day, your the price, like just say you get your alert that price has exceeded 4,900, right? But the time of day that you can start trading is because let's just use, I'm just gonna pick this random area right here, right? We're gonna pick this area right here, right? So let's just say this is when price got down to the 4,900, right? Okay, boom. That's at 11 a.m. Right? Cool. The market is open at 11 a.m. So when price hit that, it's hitting your monthly level. This is a monthly level. So when you get that alert, right? When you get that alert, you're basing it off of this monthly level. but it's giving you the alert during a time of day when the market is actually open. But let's just say if this happened during a time of the day when the market wasn't open at all. So now you know it's exceeded your level that you want to get in. And so now we're just going to, like I say, we're just picking this area right here just for a random area. Now, this is a time of day where it's like this is like 8 a.m. This is like 9 a.m. Whatever. Now, this is New York market time, but it's still around your area that you want to get in. You're not in yet, right? So now if you got the opportunity to just look, you want to look at the chart and want to refine your entry now based off of your monthly levels, you can say, hey, I see that there's an opportunity to trade something. In this case, it really ain't nothing to trade down here on this order block down here because price never got down that far. You know what I'm saying? But you're still looking at these monthly candles entering in on your monthly, right? But now you know, hey, I can put my stop at least below 43.97 because it's consequent encroachment of the daily, right? And then you say, okay, and now I can trust, I mean, the mean threshold, that's mean threshold of the daily. And now I can trust that as being a good place to keep my stop because now I see that I got all this balanced price range down here that price don't want to come back below. So I don't have to put my stop way down here. And I don't even have to put my stop below this right here because I can trust that it's not going to come back down below this mean threshold because how I was trading. So you know what I'm saying? It's like the looking at the lower time frames is not required, but it just help you refine your entry if you want to refine it and reduce your risk. Meaning you don't, you know what I'm saying? You don't have to set your risk all the way down here because you're only looking at the monthly candles.
Okay.
You still got
So
to look on your face, Michelle.
yeah. So then you're picking your stop. So if you do go down to the 1 hour and you're refining your entry, then your stop is based on that 1 hour chart. And if you're not down at the 1 hour and say you're doing like a 4 hour or even a daily, then your stop would be based on the 1 hour, or I'm sorry, the 4 hour, the daily chart. So the higher
Yes.
time frame, then the bigger the stop loss is. Therefore, the bigger the target profit target would be, because you're still trying to manage your risk to
Yes.
reward
You want
ratio.
yes. It like if you're risking more, you want to shoot for more. Right? You know what I'm saying? If you're risking less, you still want to shoot for still want to shoot for more, but you don't need more based off the risk, right? So if you got in, like just using this right here for example, right? If you got in here based off the monthly, right? This right here wouldn't be a good risk to reward, right? Because your risk is all the way down here and you're shooting for this right there. But if you got in over here based off the daily, 4 hour, or the hourly, right? You're getting in here, your risk is down here and your reward there. That's a great risk to reward. You follow what I'm saying?
Yep.
Right. So going to the lower time frames just give you the opportunity to refine your entry. Sometimes it give you a better entry. Sometimes it give you a better entry and a better risk. And sometimes the entry and risk are the exact same because of how price is trading at the time. Right. But in this case, it just happened to be the same entry, but better risk to reward. Because this it's all playing off this same monthly entry right here. This is the same monthly entry, but the lower time frame just refining your risk. So you got way better risk to reward. And then you can get in here, get out there with a great risk to reward. Whereas, you know what I'm saying, getting in here with your risk being way down here, and now you got to wait. Matter of fact, let's see how far that is. Like if you got in there and had the risk at least down to there, right?
It's like 360
Yeah.
points.
Yep. So now you would need price to at least come back up to here to be a 1-for-1 already. See, it's like a lot longer term hold. So, but this is a monthly chart. So if you're entering based off the monthly and trying to use your risk based off the monthly, you're looking at way longer positions. That's why you base it off the monthly, and then, like I said, you want to make your entries based off either the 4-hour or the hourly, because you're basing it off a monthly, refining it down to a weekly, refining it down to a daily, and then that way, once you got your daily order block, right, and it's combined with your weekly and your monthly, now you know, okay, boom, I can get me a shorter term swing inside here because I'm going long based off the monthly bias coming off of a monthly level, but now I'm basing it entering in off of a 4-hour or hourly level. Like, let's look at the 4-hour in that same area, right? Looking at the 4-hour in that same area right there, right? This is, remember, this whole area from this high right there to this. Let me move these arrows from this high right there to this low. That's the entire daily order block, right? So these are 4-hour candles. We're coming back down right here into this 4-hour order block right there. So if you came down and got long off of this 4-hour order block, that's your 4-hour entry right there, right? Like I say, based off of the 4-hour order hourly, right? When it came down, it broke through. Like I say, it break through the high. Boom. Once it hit the entire order block, your alert go off. Bleep, 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 bleep. This is the body. The alert go off when it hit there. You can decide to go in there. You can decide to go in when it hits the body, whatever. But as soon as it touched that order block, you want to be acting, right? You giving it to, right, at least the mean threshold of that order block, right? At least the mean threshold of that order block, because you entering there. But as you see, it never even get below the daily mean threshold, but you giving it to below the mean threshold. The safe would be below the order block, right? But you're entering based off that 4-hour entry, but your bias is coming from the monthly, the weekly, and the daily order blocks. You
Okay,
see
and
what I'm
then your
saying?
stop would be down there at the right below the bottom of that wick,
This
the low
this
point.
is your safe stop would be there, because it's the bottom of the order block. It's the bottom of the 4-hour order block. This your 4-hour order block right here.
So that's your safe stop down there at the bottom, right there where you
Yes,
just.
your safe stop gonna always be below the low of whatever you're using, right? Just say if you was using this big bissy right here, this is the swing low that's below that bissy right there. You can use this swing low because that's the swing low of the bissy, and it is real close to the actual swing low of the move. So the safe way is going to always be below the swing low, right? The mandatory is going to be below the mean threshold or consequent encroachment. That's going to be the mandatory, because if it's a strong order block, you don't want price to even get to the mean threshold, let alone, you know what I'm saying, go below it. So that's your mandatory. And then to be safe, because it can wick through the mean threshold, to be safe, you put it below the low of the order block.
Okay, that makes sense. And then my other question is, are you considering any other PD arrays with this order block strategy?
Nah, this is just straight off order blocks.
Okay.
It's just straight off the order blocks. You see everything everything I mapped out. I mapped out a monthly order block, a weekly order block, a daily order block, and then I was showing trades based off of 4-hour order blocks and hourly order blocks. Everything just based off order blocks on here.
All right,
This
thank
is
you.
You're getting a sneak peek into some stuff we're going to be talking about. We're going to be talking about sneak peek. Don't tell nobody about that.
All right, thanks. Appreciate you.
All right, appreciate you. See, I told y'all, man, Michelle always come up with. I know some of y'all had them same questions, and ain't nobody want to say nothing. Michelle, get off my stage. Get out of here. I kicked Michelle out, y'all. Hey, you're welcome. Sonia, you're very welcome. Hi, Tim. I'm not patient waiting on I'm not patient waiting in trades. Which time frame is best to frame your trades? I didn't read that very well, Sammy, but there is no such thing as best. There's no such. If you're not patient waiting in trades, you shouldn't be trading. If you're not, I'm saying this again, and it's not an attack on you, Sammy. This is for Sammy and anybody else. If you're not patient waiting in trades, you should not be trading live money. The only way to gain patience of holding trades is by doing it. Right? There's no such thing as a best time frame for anything. Just like in my example, I showed what a person who don't have, and it's just not for 9 to 5ers. If you don't want to sit down in front of the charts and watch the price like I do throughout the day, right? This is something that you can implement. You don't have to be 9 to 5, right? You can implement this if you don't want to sit, but there's no such thing as a best time frame. Time frames is not going to help you with being able to hold through trades. The only thing that can help you with being able to hold through trades is holding through trades. So if you don't have the patience to hold through a trade, you should not be trading live money. You still need to sim trade until you are comfortable with holding through the duration of a trade. When you get bored with your model, that's when you should go live money with your model. If you still get anxious when you're in a trade, if you still like are afraid of getting stopped out, if you still now and with me, and I know y'all say, Tim, you always be trailing your stop. I trail my stop because I be trading inside evaluation accounts that my stop loss follows me. Right? It follows me the entire time I'm trading this evaluation account. My stop loss follows me. So if I get up $500 in a trade and then it come back against me and stop me out for $250, I still lost $500 worth of stop because I got up $500 in that trade. So I have to trail my stops quickly so that if it come back and does stop me out, I don't lose that cushion of stop loss. Now, once I, get to the PA phase and I get past the threshold, it don't follow me no more. But while I'm in evaluations, it's always trailing and following me. That's why I'm trailing my stops. Like, it's not that I'm impatient. I have to because of the restrictions of the account. You see what I'm saying? But if you're not patient, right? If you're not patient enough to stay in trades, do not trade live money. There's no such thing as a perfect time frame. You have to figure out what your trader identity is. Once you figure out your trader identity, let's go in here. I'm gonna give y'all a super sneak peek of something that only a very few amount of people will ever see. Now we're going to forget about what time frame this is. Get off my screen, Sammy. We're going to forget about what time frame this is. Ignore the time frame. We're going to talk about institutional order flow, right? When it comes to institutional order flow, you got internal liquidity and you got external liquidity, right? Internal liquidity, external liquidity. Forget about what time frame this is, right? So now, we're going to do this like this right here. Right? I'm gonna move the chart over to here. Right? I'm gonna put a line up here. Right? I'm gonna put a line right there. And I'll put a line right there. Right? So forget about what time frame it is. Time is fractal. Time is fractal. It don't matter. You pick your time frame, right? But the candles are candles on any time frame you're looking at, right? So, right, we're going to make this interactive, right? Now, in the chat, if I don't see somebody putting stuff in the chat, I'm just going to stop the live right now. I'm just going to end it. Now, in the chat, what kind of liquidity is resting above this green line up here, internal or external? What kind of liquidity is resting above this green line right here, internal or external, right? And for those, if you can't see it, that says buy side liquidity, BSL, buy side liquidity, right? What kind of liquidity rests up there? What kind of buy side liquidity is up there? Internal or external? Very good. Very good. External, 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 external. Very good. External liquidity is up there. What kind of liquidity rests below this red line down here at the bottom? 4305. What kind of sell side liquidity rests down here? Right? External, 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 external. Very good. External liquidity. Now, curveball. What kind of liquidity rests? Sorry. What kind of liquidity rests there? Curveball. What kind of sell side liquidity rests right there? Go. Put it in the chat. What kind of sell side liquidity rests below that low right there? Internal, external. What kind of liquidity rests right there? Curveball. Curveball. Internal, 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 internal. Right? Who can tell me why I say it's a curveball? You're all correct. Who can tell me why I say it's a curveball? Internal. All of you are correct. Who can tell me why I said it's a curveball? I'm gonna give you a second to type it out. Because of the swing low. What about the swing low? What about it? You're on the right track, Sanjay. What about that swing low? Right? What about that swing low makes that? No, not that it's a target. Not that it's a target. Right? Not that it's a target. Right? Let me give you a hint. Let me give you a hint. From that low right there to that high right there. What kind of liquidity is that sell side? From that low right there to that high right there. Nope, not because it's a breaker. If you go from that low right there to that high right there, what kind of liquidity is that sell side? Right? You were absolutely correct saying that it's internal liquidity based off of that low to that high. But I said it's a curveball because I said what kind of liquidity rests at this sell side right here. Right? Yes, it's a new price leg. It's a new dealing range. It's a different dealing range from this high to that high. Right? So from this low to that high, that's one dealing range. Right? So in this one dealing range, the external liquidity is here and here. Right? But from this low to that high, that's a different dealing range. So from this low to that high, this sell side liquidity is external liquidity. But from this low to that high, this liquidity is internal liquidity. So it's all about the dealing range that you're looking at that's going to determine if you have internal or external liquidity. That's why I said it don't matter what time frame you're looking at. It's all about the institutional order flow and being in sync with the algorithm, right? Because and when you get to external liquidity, you expect some type of retracement, some type of rejection, some type of something, right? So for this dealing range right here, watch what happens when we hit this external liquidity for this dealing range. Boop, we pop back up. Boop, all the way to the top, right? And why is that? Because from this low to that low is not the dealing range that the algo was looking at for this time frame. Why? Because we are in a bullish trend. The trend is bullish, right? The trend is bullish. We're continuing up, right? And when we get to there, what happened when we came over here? Right there, right? When we pulled back down in this dealing range right here and took out this external liquidity, right? We went and took out external liquidity. When we get to external liquidity, what do we expect? Some type of retracement, right? So we retrace down. Where do we come to? Internal liquidity, which is this order block right here. We come down to this internal liquidity, right? We go up, we go back to internal liquidity, right? And then from this range to that range, we come down and take out external liquidity, right? Because from this low to this high, we're taking external liquidity out. And when we take out external liquidity, what do? We reverse and we take out external liquidity here, and then we take out external liquidity from this high to that low, right? From this high to that low, we come all the way back up and take out external liquidity again, and then we come back down and continue to push up. So it's all about understanding the institutional order flow. It don't matter what PD array you choose to use. It's all about what's the draw on liquidity based off of institutional order flow. I know I probably lost a whole lot of people, but that is all I got for the day. You need to be mindful of dealing range. Yes. So if we're looking at the entire range, for example, for external to external, I mean, what would that internal be a form of accumulation? Great question. And that internal would be a form of accumulating more long positions. Why? Because they're attacking sales stops to accumulate more longs. And when they go up here, they offset some of those longs above this high. And then they come back down and they accumulate more longs inside this order block, right? They come down into the order block, right? This is like a propulsion block, right? They come back down into, see this area, all this area over here, this consolidation. We got like order blocks inside there, which is acting as propulsion blocks, but they're accumulating more longs where? Below this internal liquidity at this order. They're accumulating longs inside the order block, accumulating longs by taking out this internal sell side. And once they get enough longs, and they offset some above these highs, right? Come back down into, right? Come back down, come ricking right into that high right there, go right into the high right there, pick up a few more longs, push back up. You know what I'm saying? So anytime you come down and take out internal liquidity, right? Whenever you come take out internal liquidity, sell side, and the bias is bullish, you're accumulating long positions. Yes, you are absolutely correct. So if you are a turtle soup trader, you want to be buying below lows. If the sentiment is bullish, if the draw is bullish and you're a total turtle soup trader, you want to be buying below external lows or internal lows, right? If the internal lows are at or below equilibrium. See, these lows are below equilibrium. So when you come down below them lows, you want to be buying down here. If you're a turtle soup if you're a turtle soup trader, all right? Just like if you're a turtle soup trader, you want to be selling above these highs. You're selling above these highs, right? But that's against the grain. So you have, if you trading against the grain, right? You want to be mindful of fair value gaps. That's your gap risk below you. That's your gap risk to go against you. If you're long, you want to watch these gaps below you. That's your gap risk, right? If you're trading against the grain, you want to pay attention to this because it might come down there and reverse on you. If you're trading against the grain, you want to pay attention to this order block. It might reverse on you. You're trading against the grain, you may not get back to the low, right? That's why I say when you're trading, you want to trade with the bias. That's your more probable trades. Those are trades you can hold longer. You can trade against the grain, but you have to be aware of where the market may turn on you. That boy just had a moment. Holy macaroni. That was for you, Rocky. Holy macaroni. Hear me. Hey, man, that's all I got. If y'all got more questions, I'm sorry I don't feel like sitting around here. My light that even went out. I don't feel like sitting around here no more. I appreciate y'all. I got on here to talk about one thing. I ain't even made my slides for my thing tomorrow. I got to try to make my slides. I don't know if that's going to happen. I'm going to spend time with my family. If I ain't got no slides for the thing tomorrow, hey, sue me, man. It is what it is. Till the next time, man, I appreciate y'all for hanging out with me for an hour and 26 minutes. This is your boy Big Spot, and I'm gone. You feel me?